The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
A redemption song and a rotation for U.S. equity markets. Live from Studio 2 here at Bloomberg headquarters in New York, I'm Romaine Bostick.
And I'm Katie Greifeld. We're kicking off the closing bell here in the U.S. It's a Friday, and stocks are green. The S&P 500 higher by about 1.7%. You take a look at big tech, slightly better, but really looks pedestrian compared to what we're seeing in the small caps right now. What a bounce back for the little guys, higher by about 3.4%. We know that it's been kind of a brutal week, so of course a little bit of green to finish out the week, but we'll see if it sticks. And speaking of sticking, let's talk about Bitcoin, because oh wow, we were just about $10,000 lower this time yesterday than where we are today. Romaine, Bitcoin higher by nearly 12%. Back at $70,000 a coin.
Yeah, definitely a welcome reprieve for all the markets. Cross-asset rise after a rough and tumble 3 days. Hindsight Capital now making it clear that what transpired, at least in the equity market, was less a stampede to safety and more of a juice cleanse to loosen up from that tight and crowded tech trade of the past few weeks. A rollover into a broader array of potential winners for the next chapter of this bull market. So where does that chapter lead us? Well, it leads us into biotechs, into old school electronic components, into airlines and truckers, and into banks. Tech is getting a bid too, but not to the same intensity. Yes, the S&P and NASDAQ are up almost 2% in some cases, but the Russell 2000 small caps up more than 3%. S&P 400 mid caps at a record high. Dow Transports a record high. Dow Industrials a record high above 50,000. The S&P Equal Weight Index at a record high. Meanwhile, the Philadelphia Semiconductor Index, which is up 6% on the day, still 3 percentage points away from any new record. The NASDAQ 100 still nursing a 4% drawdown from its last record, and the Mag 7 still down 6. So the broad sell-off, it's ended, Katie, but the rotation resumes.
And of course, we've been watching this volatility unfold as we really got some gigantic earnings this week. So I thought we'd take a look at the scorecard right here. You're taking a look at the breadth of S&P 500 earnings beats. If you take a look at what the fourth quarter has delivered so far, 78.5% of S&P 500 companies that have reported have beat earnings. That, of course, is a downdraft from what we saw in the third quarter, in the second quarter. But take a look at where we were a year ago for the previous fourth quarter earnings. We're healthily ahead of that at this point. Romaine, we're not out of the woods yet when it comes to earnings, but we know we got big tech this week. And it was a really mixed reaction to some of those CapEx numbers that we got in particular, still very much at the focus of this market. Absolutely, and a big focus of this market has been the potential broadening of returns. Our next guest sees some of that broadening and opportunities in it. George Maris, Chief Investment Officer, Global Head of Equities over at Principal Asset Management, joining us now to kick us off to the close. And George, what do you make of the, I guess, shakeout, if you want to call it, over the last 3 days?
Yeah, I think, first of all, it highlights the incredible amount of enthusiasm behind a significant sector of stocks, right? We saw everything with respect to AI and technology. You know, there's been a huge rush into it and a huge pull away from this. I think what you're seeing now is an evolution of a broadening market, just like you talked about. A lot of what's working today may very well persist throughout the rest of this year. The older economy type of stocks, things that are going to benefit from a cyclical upturn. When we talk about sort of the idea of investors chasing that, is there any concern about correlations, or have those correlations splintered enough where the stock pickers can do their thing? I think there's still a high degree of concern over correlations and of risk. I mean, you're seeing, look, over the last several days, we've seen factor-driven markets dominate. Stocks are moving kind of irrespective of earnings and fundamentals and forward outlook. Frankly, from a stock picker's perspective, while it's frustrating in the near term, it's really attractive long term, right? Because it sets up tremendous arbitrage opportunities to invest behind where that earnings power is coming from. Well, George, earnings just one half of the equation when it comes to stocks. Let's talk about monetary policy. I find this line in your notes really interesting, that when it comes to the Fed right now, it's a stabilizing influence, not the primary driver. Walk us through that view. Well, I think at this point, whether we talk about one or two more cuts from the Fed, from a real economy perspective, there's very little push that's going to have anymore, right? We're not trying to come out of a recession and bolster things. We're not trying to cool things down either. We're kind of keeping steady state. And in fact, you could have argued 12 months ago we were maybe mildly restricted. I don't think that argument holds anymore. I think we're kind of at, roughly our star, wherever that is. I think the bigger issues now are much more on the fiscal orientation, whether it's the tax cuts that are coming in, it's deregulation, or it's just, it's significant policy like we're getting today that comes out of the blue for you. I think that's the bigger driver.
Yeah, absolutely. I hear what you're saying there, but would you expect that Fed policy could maybe take the baton back once we get that new Fed chief installed, especially, it's been just about a week since President Trump nominated Kevin Warsh, or his intention to nominate Kevin Warsh as the next Fed head?
So, Katie, I wouldn't suggest that we don't pay attention to the Fed. I think we pay a lot of attention to the Fed. I do think the fact that first you've got Kevin Warsh, who has certainly historically a very balanced view of the Fed's impact and influence is important. It means he doesn't want the Fed to be driving the economy going forward. They're clearly going to be very thoughtful with respect to managing both, the dual mandate, inflation and economic growth. Right now, inflation looks okay, and especially as you're looking in the latter half of this year, as you look at some of the components, those will start anniversarying positively. We should subside, inflationary pressures should subside. We still have to make sure that employment growth is stable and improves. I think they'll be looking at that, but I don't think the Fed sees itself right here as the critical element that's going to be able to solve that problem. So I think it's taken a step back in terms of the ultimate market construct.
When we talk about the market construct and more some of the structural issues here in the United States, obviously there was this narrative a few weeks ago about people looking outside of the U.S. for more opportunity, not necessarily sell America, but maybe a diversify America. Do you see that trade still intact? And if so, how far does it go?
I think it's absolutely intact. And I think you're right, Romain. I think it's brilliantly stated. It's not a sell America. It's let's look elsewhere. Just like the broadening from large cap to smaller cap from a lot of these, great growth compounders into more cyclical value stocks. I think you're seeing a move outside of the U.S. as well. One, partly because when you get outside the U.S., you're looking at a greater cyclical universe, right? There's more banks and industrials as a percentage of their economy, as you have within the States. But also a lot of fundamental trends that have really helped out the U.S. have now gone abroad, right? We're seeing technology innovation take off, particularly throughout Asia. We're also seeing a very expansive both fiscal and monetary support outside the U.S. So in Japan, you've got a government that's looking to cut taxes and drive fiscal growth. In China, you're looking at continued improvements, both for the manufacturing as well as the consumer sector and stabilizing real estate. That's hugely helpful. And on the continent of Europe, we're seeing much more accelerated spend in growth than we've seen in the past, whether that's in defense or in infrastructure. All of those are incredibly supportive. And given the valuation disparity between the U.S. and the rest of the world, it creates pretty compelling return opportunities.
All right, George, always great stuff. George Maris, CIO and Global Head of Equities over at Principal Asset Management, kicking us off to the close here with a big rally afoot in the markets. One of the big gainers on the day, Ventas. We're going to talk about senior housing and the aging population. A conversation in just a second with the CEO of that company.
Then we'll take a look at the markets with Thomas Peterffy. He is chairman of Interactive Brokers, plus a deep dive into the company's newest foray into the world of prediction markets.
And speaking of prediction markets, one of the biggest days of the year for that space and for sports betting, Super Bowl Sunday afoot. A big special coming up in just about an hour where we talk with some of the biggest players in the world of sports. You don't want to miss it. Stick around. This is The Close on Bloomberg.
Shares of Ventas higher after its latest earnings result underscored the strength of the senior housing market. The real estate investment trust beating revenue estimates helped by additional tailwinds coming from its medical office and life sciences assets. Joining us live on the back of that report is Ventas Chairman and CEO Debra Cafaro. Debra, great to have you with us. So I feel like we talk frequently on the close, actually, about the aging population and how that's translating through into the real estate market. Clearly, you've seized on that opportunity. Tell us how Ventas fits in to that market.
Well, great to be here. Ventas reported a great earnings report today and is a $50+ billion enterprise focused on the mega trend of demographic demand. We own 1,400 properties that serve a large and growing aging population, principally through private pay senior housing, where we own 800 properties and serve 83,000+ residents.
And so I'm taking a look at what our Bloomberg Intelligence colleagues had to say about your report. They talk about your expansion strategy, especially that we saw last year. I know that you plan to keep up that pace in 2026, targeting $2.5 billion of investment here. So give us a little bit more detail. I mean, where specifically are you looking when it comes to geographies, when it comes to, different things that tie into this aging population?
Yes, as demand for our communities is strong and getting stronger, we've been executing on a strategy that is first driving organic growth from the high quality communities that we own. And that's especially powerful as the baby boomers start turning 80 in this year in 2026. Secondly, as a consolidator, we are acquiring a couple $2 billion plus a year focused on senior housing. And we're principally buying large communities in markets where we see a tremendous amount of demand in the foreground. And we expect 2 million people a year turning over 80 in the coming years, while there's very limited supply of new construction. So all the markets that we go in have at least 1,000 basis points of forward net demand expected from this surging senior population and the limited new starts that we see in those markets.
Debra, has there been any discussion, though, about trying to ramp up actually the pace of the build out? I mean, you cite those numbers. We've seen some actually absolutely eye-popping numbers about the number of folks who will be retiring. I think it's something like 500,000 just turning 80 every year for the next decade or so. So it's a huge amount of people potentially that are going to need that space. How much faster can you ramp up?
Yes, so there are actually 2 million people a year turning 80 starting in 2026 with the baby boomers, Romaine, and only 2,500 units of senior housing were started in the fourth quarter of 25. So we are ramping up our U.S. opportunity where we're 86% occupied, and we see a long runway ahead of occupancy rate and net operating income increases. And we also are acquiring, and we're ramping that up quite heavily. We expect to be aggressive in expanding our senior housing business through both organic growth and through external consolidation. And there is a great need for senior living communities. It's a consumer choice that offers over 80 residents safety, security, and important socialization benefits at an affordable cost.
I am curious, though, Debra, also about the other side of the business when it comes to the actual kind of pure medical facilities and research facilities there. I know it's a slightly smaller part of your business, but it's also a slower growing part of the business. Does that change anytime soon?
Well, when you look at some of our business, we are a leader in research at major universities. That's the smallest part of our business, only 8%. The U.S. is a leader in biomedical research, and we saw that NIH funding was just restored by Congress, so that also helps people live longer, healthier, and happier lives through biomedical discovery. Our outpatient medical benefits from the over 65 population growth, so it also is fueled by the mega trend of longevity. And we continue to expect to see that business deliver attractive compounding growth as we look forward, and more procedures are being done in outpatient settings.
Debra, always a pleasure to talk to you. We got to get you back on here and talk about some of those longer-term trends soon. Ventas Chairman and CEO Debra Cafaro, fresh off the company's earnings report, the shares heading for their third straight week of gains. Now, when we come back, we're going to talk about the big game, and we're also going to talk about the Bloomberg Big Take. Sports gambling has actually got a big new player in that space. It is the prediction markets, and our next guest says they're cannibalizing the legal sports betting industry. That conversation coming up next here on The Close, right here on Bloomberg.
Bags are packed. I'm ready to go to San Francisco. Super Bowl week is always crazy, but I'm ready. Let's go. I'm Randall Williams, a sports business reporter at Bloomberg News, and I'm taking you inside the world's biggest, flashiest, and most expensive sporting events to answer one question. How did sports become this big of a business? Today, we're headed to the single most watched event in American sports. Welcome to the Super Bowl. Now, using the word big to describe the Super Bowl is an understatement. Last year, in a blowout win that no one saw coming, Super Bowl 59 became the most watched TV broadcast since the 2024 Super Bowl. And Super Bowl week didn't just dominate TV screens, it generated $1.25 billion in economic impact for New Orleans and the state of Louisiana. This year, for just the third time ever, San Francisco is hosting the game with NBC handling the broadcast. And the hype is palpable, with the New England Patriots reaching their record 12th Super Bowl and the Seattle Seahawks looking to avenge their Super Bowl 49 loss. But here's the thing, the sports business doesn't wait for storylines. Before this season even kicked off, NBC had already sold 90% of its Super Bowl ad inventory at an average cost of $8 million for 30 seconds, a record high. So how did we get here? Let's rewind to the origin of how this event came to be. The game originally got its name in 1969 during the third ever Super Bowl. Late Chiefs owner Lamar Hunt jokingly called the championship the Super Bowl after watching his kids play with a toy called the Super Ball. And right in the middle of the football season's grand finale was entertainment. The halftime show started with marching bands, but that changed in 1993 when Michael Jackson took the stage. MJ's performance brought the show millions of viewers and its first ever sponsor, Frito-Lay. Now the payoff for artists is massive exposure. With two major audiences, football and music fans, the Super Bowl has become prime real estate for advertisers. Everyone has a favorite Super Bowl moment. A favorite game, a favorite halftime show, a favorite commercial.
Remember when Britney stole the show in 2001?
That's why the Super Bowl is unmatched, why broadcasters paid billions to air it, why advertisers paid millions for seconds, and why team owners are rebuilding their stadiums chasing the chance to host it. Because for one Sunday a year, football isn't just a game. It's the biggest business on earth.
Bloomberg's Randall Williams there taking us through the business of the Super Bowl in his Sports City series. Of course, it is the most watched American sporting event, TV event, we should say. It's also the bigger wagering event of the year. Joining us right now to talk about that side of the story is Jordan Bender, Director of Gaming and Gaming Technology Research over at Citizens. A lot of money gets wagered every year for the sports betting companies. This is their Super Bowl, pun intended. But this year's a lot different because the traditional sports books aren't the only game in town anymore.
Yeah, it is gamblers' Super Bowl. It is the biggest day of the year for them. On Sunday, we'll see about 1% of the total handle for the year wagered on the Super Bowl. This year, we do think it's going to be a little bit different. It might be the first year we actually see handle decline year over year. We kind of break it into two buckets. One is there's not as much storyline. There's no Taylor Swift this year. There's no Jason Kelce.
Thank God, by the way.
There's no Patrick Mahomes. So there's just less storyline and less things to bet on. That's in one bucket. In the other bucket is the prediction markets, and we've all seen them blasted everywhere. We've done research that basically has told us that prediction markets are cannibalizing the sports betting industry at about 5%. So as we kind of combine
at about 5%, I mean, they're taking about 5%.
5% of total wagers. So if we put both of those together, basically we're modeling for handle to be down 2% this year for Super Bowl.
And first of all, I will say I'm a little bit disappointed that Taylor Swift isn't going to be at the Super Bowl. Really enjoy seeing her fits. But let's talk a little bit, though, about how some of these sports books are trying to position themselves to compete with prediction markets, because you think about FanDuel, you think about DraftKings coming out with their own products. I mean, what do you make of that trend versus a BetMGM, for example, which has deliberately stayed out of the prediction markets?
Yeah, we saw this back to start the NFL season. Kalshi, it was kind of fast and furious. They really just hit the ground running here with the amount of product and markets that they put out for everyone. And it almost felt like everyone got caught a little flat-footed here. What we're seeing, though, from the traditional sports betting companies, DraftKings and FanDuel, they are now live with the product. They launched, sometime in December, and they're kind of up and running. But we really just haven't seen anyone be able to catch Kalshi at this point. We're about at about a dozen companies that have launched a prediction market platform. That's probably going to go up to about 24 in the next couple of months. So it's really about catching Kalshi and kind of what they're doing.
Does Kalshi have a regulatory advantage here? I mean, we spoke with the CEO of BetMGM the other day, and he kind of brought this up idea that when you go and you look at some of the state regulations on sports gambling, it kind of puts some of the traditional sports book at a disadvantage to what Kalshi is doing.
Yeah, the way that this industry was formed is there was they went through the state level, and they spent a lot of money to do it the right way, and that's how the sports betting industry would look at it. Kalshi and some of these other companies, they're going through the federal level, the CFTC. And, it is legal. The courts are still trying to figure out how legal is this? Is it going to last? But there's no guardrails, there's no parameters, and Kalshi and Polymarket and some of these companies are willing to just go out and do what they need to do. DraftKings and FanDuel, or parent company Flutter, those are very regulated companies. They can't just do whatever they want because they have gaming licenses, and if they mess up, they can get those pulled, and that's kind of the end of the day for them.
Absolutely. They want to stay on the right side of their regulators, I have to imagine. I want to talk a little bit more about the game that we're getting on Sunday, because, again, we were speaking to the BetMGM CEO, geez Louise, that's a lot of letters. And he said that 65% of the money bet so far was on the Seahawks. And I think that's interesting. I mean, is it better for these sports books when you have a contentious game, whereas if there's a clear winner, do you see less interest?
Well, it depends who you ask. If you're the sports book, you want a 3-0 game, because a lot of the betting on the game is on player props. Over 50% of bets are on player props. So, if people aren't scoring, if people aren't getting a lot of yards, those props aren't going to hit, and that's going to be a good thing for the sports book. So it really depends on what side you sit there. But taking the other side of that, the more action, the more betting, and that's going to attract people into these sports book, and it's going to keep them there longer, and retention metrics will look better that way.
All right, Jordan, really appreciate you coming by the studio on this Friday ahead of the big game. That is Jordan Bender. He is Director of Gaming and Gaming Technology Research over at Citizens.
Have you placed your bet yet?
I don't think I've ever bet on a sports game. Have
Ever?
You?
Not on horses?
No, it's not a very liquid market, Roman.
Okay.
Well, for dressage, for racehorses.
Oh, dressage.
Racehorses, of course. But
that's where the horses like dance.
They dance,
okay.
Yeah. But I don't play
cute.
the ponies.
No.
Anyway, Romain, we have a big show coming up in the next hour. We're going to have a Super Bowl special. That's at 4 p.m. But don't go anywhere, because coming up next, we're going to speak to Thomas Peterffy. He is the chairman of Interactive Brokers, about the rise of, you guessed it, prediction markets and how his company is getting into the mix. That conversation up next. This is The Close on Bloomberg.
3:30 p.m. in New York. This is the countdown to the close. I'm Romain Bostick.
And I'm Katie Greifeld. And we're continuing our coverage of prediction markets, because an interesting story about Cboe on the terminal this morning, that Cboe is planning to roll out options contracts on binary event wagers in their own specific prediction marketplace. Yeah,
basically this sort of yes, no, if you will, sort of push that we've seen. And they talked about this on the earnings call. They kind of want to get this done by the end of the year. But you're now starting to see these big exchanges sort of really look into this. We've seen investments by some of the more traditional stock exchanges, and now some of the other ones are saying, look, we've got to be in this in some way or another, at least as far as regulations allow.
And Cboe, the way that they're going about it is really interesting, because, we spoke to the CEO back in November, I believe it was, and he said specifically they're not looking to get into sports events contracts, that they want to stick to their knitting when it comes to financial, economic contracts there. So there's many different ways to go about this, and that leads us to Interactive Brokers also getting into prediction markets through its trading platform, IBKR Forecast Trader. So let's discuss now with Thomas Peterffy. He is chairman of Interactive Brokers. Pleased to say that he joins us now. Thomas, great to speak to you again. So we've talked, of course, about Interactive Brokers' own plans for its prediction market. As you know very well, it's a crowded space at this point, with new entrants coming seemingly by the week, by the month. So how are you positioning IBKR Forecast Trader to compete in that environment?
So we are not newcomers to this market. As a matter of fact, we started our prediction market several years ago, but we first came out with it for phony money, and just became licensed in just before the elections of 24. So we are not at all new with it. Kalshi, of course, has taken the much of the action because they are doing sports, and so is Polymarkets, and we do not do sports. We are focusing on the economy and the environment, and to some extent on politics.
It's interesting, Thomas. I was taking a look at your most recent earnings call at the transcript. This was pointed out by Neil Sipes over at Bloomberg Intelligence. You said that your top product on your prediction market is daily temperature contracts, which I thought was really interesting. I mean, what do you make of that? Do you think that that's individuals?
It's fascinating because the daily temperature markets have a very, very high correlation with electricity demand. And electricity, of course, has a very high, electricity prices have a high correlation with natural gas prices. So when we look at temperatures, I think that the electric companies are beginning to express interest in these contracts, and they are going to use them as hedging.
Interesting. So that speaks to that more institutional use,
Absolutely.
a hedging tool, rather
Yes.
than people coming in and using it for entertainment.
Yeah, so generally our focus is on looking at what is coming down the pike for the economy in general, and specifically for many of the companies that our investors are concerned with, so that they can use these contracts as hedges, and they also can use these contracts to evaluate where demand and supply changes will occur in the economy, so to see which companies are best positioned to fulfill that demand, and so in order to basically try to maximize their investment returns, because it's all about changing expectations and to try to make the economy more efficient. That's what investments are basically all about.
With regards to some of the more pure play financial contracts on the prediction side of IBKR, so whether you're betting on where Bitcoin might go or something like that, are the people buying those, are they already invested in those assets and using this as sort of an add-on or a hedge, or are you just getting sort of pure play people going on to the prediction side?
No, most of our investors are they have a portfolio of stocks, and some of them also have positions in Bitcoin, and but no, most of them have a portfolio of stocks, and they are basically serious, successful investors. That is the reason why we were able to show that in 2025, our customers as a whole outperformed the S&P by 1.3%, and our hedge fund customers, interestingly enough, outperformed the S&P by 11% in 2025. So we have a very professional audience of investors.
Why do you think there's so much interest in this type of sort of binary trade now, rather than sort of the traditional ride or die?
Well, exactly because you can ask questions that the security markets basically cannot answer, such as what will be the demand for electricity, for example, in a specific area, right? So and that's of course ties in, of course, with AI and all these new data centers that are being erected, and of course various ways of generating more energy, and so it's all about big economic questions that the stock market cannot answer.
I am curious as to how you think this could change traditional financial markets, and I think about your own career arc. And obviously what IBKR did, which was revolutionary at the time. And you go back to what you were doing at the American Stock Exchange, what you did with IBKR. Is this potentially going to be one of those inflection points that reshapes the traditional financial markets?
Yeah, definitely, and I hope it's still revolutionary. And this, of course, these prediction markets are a new revolution in the investment scene. Yes.
And Thomas, beyond prediction markets, I am curious, what you're seeing in the overall business, especially when it comes to your retail clients. We know that it has been very volatile in the stock market, the traditional stock market. What are you seeing in terms of activity?
Well, obviously, AI has an enormous impact, and people have difficulty understanding the implications. So the way I look at this is I wrote my first computer program about 60 years ago, and so if I look at it from that point of view, what I see is a progression of increasingly better software tools for creating applications with less time and effort, and they can do a greater variety and more sophisticated things. So AI is such a software tool, and although it's a huge jump in that progression, and it's an enormous improvement, but still it should be understood as part of that long-term trend. And if you look at it that way, then you are in a better position to imagine all the potential uses and what differences it can make in the investing environment and also in all other walks of life.
All right, Thomas, always great to talk to you. Great to catch up. Thomas Peterffy, chairman of Interactive Brokers, as our coverage continues here on The Close. A countdown to those closing bells here on a big rebound going on in financial markets. And one big exception, though, and that is home builders getting hit by, well, a Trump administration considering antitrust investigation into some of those names. We'll talk about that when we come back. This is The Close on Bloomberg. Time now for our stock of the hour, taking a closer look at home builders like D.R. Horton, like Lennar, soft on the day after a report by Bloomberg that the Justice Department here in the U.S. could open a probe in the coming weeks into whether some of those names have violated antitrust laws. Joining us right now to talk a little bit more about this is Norah Mulinda, our Bloomberg Markets correspondent. All right, I mean, I don't know what to make of the actual investigation itself, but investors did seem to be a little rattled. What do we actually know?
So we do know that the Trump administration is thinking about having the DOJ exploring the idea of opening an antitrust investigation. And this is all surrounding the leading builders of America, which we know is a trade group that a lot of home builders are a part of. Essentially, there's been some alleged discussions that they could be potentially talking with one another about maybe pricing as it relates to their homes that they're selling and things of that nature. And that's essentially what the administration is really trying to scrutinize right now. And this time that we really know a lot of attention is on affordability.
Absolutely. A lot of attention being paid specifically by the Trump administration. We've seen a whole raft of proposals. And with that in mind, I mean, what are analysts saying here about how this could potentially affect the sector and how seriously they're taking it?
Yeah, I mean, as I've been talking to my sources, Katie, it seems as though there's a pretty high bar as it relates to how far that it could really go with this and how much it would actually weigh on shares. It seems as though there may be more or less short-term negative sentiment, but not necessarily too much of an issue as it relates to actual industry fundamentals when we think about earnings. I mean, I'm taking a look at the S15 home index, and we are seeing on a year-to-date basis, it's up about 12%. Right now, as well as we're heading into further into the year.
Well, that's one thing I wanted to ask you, and I don't know if you know the answer, but when you look at the home builder index, I mean, there are quite a few names that are down, like we mentioned, like Lennar and KB Home and D.R. Horton, but a lot of the other home builders are still in the green here. So is this only targeting certain home builders, or have investors just decided that just those three big ones are the most at risk?
Well, we think about D.R. Horton as the industry bellwether. So when there's any sort of news, we always look to them. Also Lennar to move on that type of news. But this also is something that I've been hearing from my sources about the fact that we've been getting so much news on the political front in terms of cracking down on the real estate industry more broadly. I mean, we talked about Trump really talking about institutional investors and not wanting them to buy single family rentals. We've been hearing about the whole idea of the 50-year mortgage. We heard Trump homes, and now we're also hearing this. That also happened as well.
This week, right?
That might have, was that this week?
I think so.
Has anyone talked to Bill Pulte? I mean, isn't he the scion of a Pulte group?
We should,
we should
get him on the Close.
What does he think about this?
Something to do.
We've talked to him before. He's a friend of the program.
Absolutely.
He's a little weird, but we like him.
Well, also a friend of the program is Norah Mulinda. She is our Bloomberg Markets TV correspondent. We are getting closer.
Can we get back to talking about prediction markets?
Trust me, that's coming up. Don't worry. We have a whole hour where we're going to be spending a lot of time on that in the 4 p.m. hour in the context of the Super Bowl, which sources tell me is this weekend. But coming up, we're going to take
on
you
Sunday
on
this year.
Sunday. Is that different from prior years? I don't know. Anyway, Mimi Duff, she joins us next. She is head of the New York office and senior client advisor over at GenTrust. This is The Close.
I think what you're seeing now is an evolution of a broadening market, just like you talked about. A lot of what's working today may very well persist throughout the rest of this year. The older economy type of stocks, things that are going to benefit from a cyclical upturn.
And we are right now in the midst of the broadest base daily rally in more than 2 weeks. George Maris kicking us off to the close over at Principal Asset Management. And Katie, a big turnaround from what we saw the last 3 sessions. Yeah, it's hard to know what to make of this rebound in the stock market, especially on a Friday. But let's talk about it. The S&P 500 higher by about 1.9%, now 2%, heading for its best day since May. And then you can see that big tech doing even better, and the small caps back from the dead. Well, I'm more fascinated by that story, this idea of sort of the resumption of that outperformance, right? Because we were always kind of talking after they kept outperforming day after day, week after week. Was this sustainable? Then when we had the sell-off, or at least things started to break down, I was like, oh, okay, see, it was just the same thing as over again. But everyone's flocking back into a lot of those names. Mid-caps at a record high, transports at a record high, the Dow at a record high. And didn't do too poorly, I mean, during the depths of the sell-off. You think about yesterday, for example, down 1.8%. The S&P 500, by comparison, down 1.2%. They actually rose on Tuesday when you had the S&P 500 fall. So that outperformance streak, I mean, they're holding strong. Yeah. I wonder what Kalshi has to say about this as we move closer to those closing bells here. We are just roughly about 8 minutes away here. Stocks right now near session highs. The VIX being tamped down here on the day and seeing a bit selling in the Treasury space. Mimi Duff joins us right now, head of the New York office and senior client advisor over at GenTrust. Mimi, great to have you.
Hey, thanks for having me.
All right, we have a lot to unpack here because we talk about the sell-off, shakeout, whatever we want to call it, juice cleanse. But is this idea here that investors really were just kind of looking at some of the overextension, the overvaluation, maybe some were taking profits, maybe some were just running for safety. But at the end of the day, a lot of that money didn't seem to actually go out of the market. It just seemed to kind of maybe shift a little bit. And I guess we're certainly seeing that today with more of a shift into small and mid caps.
Yeah, I think this theme of rotation out of this very concentrated basket that was, say, the top 7 or 10 names in the S&P into the other asset classes is in play. And just to put some numbers around it, we've got non-U.S. equities up 7.25% on the year. So that's already a really nice start, whereas some of these concentrated tech names down 4.5%. So, and then you pick your basket in between there. So I think that's the bigger theme. We obviously had some de-risking in the past few days, and perhaps that provided better entry points for some more money, fresh money to come in and back into today. For those people that are looking to sort of broaden things out, assuming that they were concentrated in some of those tech names, do you go into small caps? Do you just go into the S&P equal weight, or do you look to diversify completely outside of U.S. markets in some way or another? Yeah, so we definitely like holding non-U.S. equities as well. We like the equal weight. We like to own a basket of everything aside from that top concentrated names. We own that too, but you don't want to own too much of that. Interesting. And I mean, that strategy obviously has served you well over the past couple of weeks here. But I mean, when you think about just the weight of these mega cap tech names, even if, that isn't, you try to deliberately not be overweight there, just the influence of them. I mean, talk a little bit about that. Do you see that changing anytime soon? I think we're just more looking for the broader play. The play outside the U.S., that's also benefited from a weaker dollar. And when we get these longer currency trends, they don't tend to be a year. So we wouldn't want to bet against that just yet. So we'd want to make sure that we have enough non-U.S. as well. with respect to the tech, these big names have been delivering the goods on the earnings side, but now that CapEx spending is very high, I think it's been brought into question. Is the profitability going to retain that same steamy pace in the next year or two?
And let's talk a little bit about what we're seeing in the metals as well, because you think equities have been volatile. Look at what's going on with gold, what's going on with silver. I know that, you have a basket to a bucket of real assets. How are you thinking through some of the violent moves that we've seen, particularly in gold? Right.
So we've got gold as a core part of our portfolio. We've also got uranium. Both of those two positions did extremely well last year. We did rebalance around November and December, so we lightened up a bit, but they're part of our core portfolio. We don't have silver now, but we do think that, there's potential further upside there, again, on the dollar side.
Well, speaking of the dollar, let's talk a little bit about government policy. There's been a lot of speculation about what the Fed is going to look like, assuming Kevin Warsh does actually get confirmed as the next Fed chair. Is sort of the play to bet on a weaker dollar, easier or more accommodative monetary policy conditions?
Well, I don't think that Trump would pick somebody that would be too hawkish, certainly on the front end. Right now, we have 2 eases priced in for the year, which is not that much. But I think that we could see that. Could we see more potentially? Certainly, if we got a weaker economy, we would see more on the front end, imagine.
So no real attempt right now to extend duration in fixed income markets based on
we're just flat. We're flat duration. We want to earn it in taxables. And then on the muni side, we're a little bit long duration. We think that there's some cheaper parts of that curve.
And we were having this conversation with George Maris at the top of the show, and his view is that Fed policy has really taken the backseat in terms of what's driving this equity market. Do you agree? And if so, would you expect the baton to be passed at any point in this year?
When you say baton to be passed, do you mean back to Fed policy?
Yes.
Yeah, so I would agree with him. The Atlanta Fed GDP now is tracking 4%, just north of 4% GDP. Trump has a pro-growth agenda. They're they're trying to find policies that suit the consumer. So I would certainly agree with that. And I don't think that the Fed is in a rush to move right now. They seem to be well placed. But if the situation changes, we could certainly see more activity, a little bit more focus on Fed policy.
All right, Mimi, great to have you here on this Friday. Have a happy Super Bowl Sunday. Mimi Duff, head of the New York office and senior client advisor over at GenTrust, counting us down to these closing bells here on this Friday afternoon. Katie, with more than 400 S&P stocks in the green. Of course, you have the big names like your NVIDIAs, your Microsofts, so sort of leading the charge. But pretty much everything else is getting a bid, too. In fact, on a percentage basis, a much stronger bid.
Yeah, it's pretty interesting how we had such a broad-based sell-off yesterday, and now the exact opposite. Makes you wonder where we're going to head next week. Even the Treasury market getting a little bit, well, actually, it's to the upside. You can see yields rising, which I guess speaks to this overall narrative of this is a risk-on day. But you think about that big drawdown we had in yields yesterday. We're not even, out of that hole.
But we call it a risk-on day, and we talk about a 9% jump in silver, 3 or 4% jump in gold. I don't know if that's reflective of speculation or defensive posture, but it's a little bit of mixed signals coming from the market. A full breakdown of some of those signals as we close out the week with our global simulcast right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic here with Katie Greifeld, taking you through to that closing bell with a global simulcast. Carol Massar and Tim Stenovic join us right now. Welcome to our audiences across Bloomberg Television, Bloomberg Radio, our partnership with YouTube here on a huge turnaround in financial markets with all of the major indices basically up at a minimum by 2% on the day.
Yeah, I've been thinking about you because I'm looking at the Russell 2000. It's actually up 3.7.
You're always thinking of me, aren't you, Carol?
Well, depends on the day.
It's not always good, though.
I do like you. 3.7% higher on the Russell 2000, and this average easily outpacing those other major equity averages for the week overall. So you can see where investors are really kind of moving on this Friday.
And on the S&P 500, a day like today where we see the S&P up more than 2%, it's actually its best day going back to May of last year. So that was sort of a post, quote unquote, Liberation Day rally. That's the kind of magnitude we're talking about today, Katie.
I'm surprised you didn't want to bring up Bitcoin, Tim, because, man, what a bounce back.
I was saving it for you.
I appreciate that. Up 11% on the day. Of course, we were down 13% yesterday. But what's super fun about crypto, as you know well, is it's open all weekend. So we're going to get some really interesting trading in that low liquidity 2 days.
Yeah, kind of interesting that he didn't bring that up, considering he hosts an hour-long show.
Hour-long.
We just had a great conversation with Stacey Maria Ishmael about it. So,
sure.
you know.
All right. Well, we talk about this idea here, whether this is truly a risk on, back on, if you will, here. Obviously, Bitcoin back up to that 70,000 level, but still seeing a bid into gold, silver, and some of the things that traditionally would be sort of interpreted as being a bit more defensive in posture. Nevertheless, we get the closing bells here in New York. And it does look like a pretty big turnaround from where we were over the last few days. The Dow Jones Industrial Average trading above 50,000 for the first time in history, adding 1,200 points, or about 2.5%. That's going to be good enough for a record high. The S&P 500 up more than 130 points, or 2% on the day. The NASDAQ Composite up about 2.2% on the day. And when you look at the small and mid-cap space, I just want to go through this. Dow Transports closing at a record high. S&P 400 mid-caps up 3% at a record high. And the Russell 2000, Carol, adding 3.6% here on the day.
Yeah, mega outperformance when it comes to those small cap names. I'm going to go, though, back to the S&P 500 because you really saw some broad-based buying by the time we wrapped up on this Friday. The S&P 500, Katie, 400 names gaining ground on this Friday, 102 to the downside, 1 unchanged.
Yeah, let's take a look at the circle, which shows us what the sectors did on the day. And man, information technology is bright green, higher by 4% somehow, which is truly amazing. Industrials, financials also having a good day. In terms of what didn't perform, consumer discretionary down by about 0.7%. Communication services was your biggest loser on the day, off by about 1.5%. A lot of those losses came from Alphabet, which finished this Friday about 2.5% lower.
All right, let me get to some of the individual gainers. There was a lot to choose from. I'm going to start with Robinhood, #1 gainer in the S&P 500, everybody. Finishing the day just shy of a 14% gain. Of course, closely tied to the crypto market, as you can buy crypto on the platform. Sure, so shares surging, as we saw, kind of anything to do with the crypto trade, really bouncing back today. And I should point, and this is even, late yesterday after the close, Robinhood, their market price target was cut to $130 a share from $155 by Truist Securities. Still bullish on the fintech company despite the weaker cryptocurrency market backdrop. I wonder if he doesn't like that call. I don't know. But anyway, he made that call, and we did see Robinhood certainly an outperformer in today's session. Let's go on over to Strategy. Really some outperformance there as well. That company up pretty much closing at its highs of the session, up 26%. The Bitcoin Treasury Company reported a $12.4 billion fourth quarter net loss, driven by that decline that we've seen in the crypto prices. Analysts do expect the company can withstand further downturn due to its cash reserves. So that was good. And so, again, that crypto trade impacting this one. Michael Saylor, also of the company, saying that the margin calls are no margin calls, I should say, on the company. So some optimism there. And then thank you, Tim, for this one. Under Armour, UA is the ticker, finishing too at its highs of the session, up more than 19%. This stock is up about 50% year to date. 20%, though, of the float is short. The company surprised investors with a quarterly profit. Revenue also slightly above the consensus estimate, and management boosted its adjusted EPS estimate. So some outperformance. There's a lot I could have done. So Romain, do not add to the list.
Hey, pop quiz. What was the best performing large cap stock this week?
Oh, my God.
Lumentum, light, up 41% here, of course, off the back of those earnings that it had the other day.
Nice.
So I'm not adding, just adding context. Because you know what, Carol Masser?
What?
Context changes everything.
It totally does.
Yeah.
Totally does.
Always saying that.
How about some decliners for some context on stocks that move the other way? We got to start with Amazon, down 5.6% today. This after the company announced plans to spend $200 billion this year on data centers, chips, and other equipment. Andy Jassy is bullish. He says it's going to go toward the company's AWS. Most of that spending will be for AI workloads. Shares fell earlier by as much as 10%, but paired those losses to close down by 5.6%. The worst performer on a percentage basis in the S&P 500, Molina Healthcare. Shares just crumbled today. This after the company forecast 2026 profit that was less than half of what Wall Street expected. This due to higher medical costs, insufficient government repayments, lost more than a quarter of its market cap today. It's pulling out of the federal government's Medicare Advantage Part D program for 2027. It expects its Obamacare enrollment and total premium revenue to drop by more than 50% this year. And finally, Stellantis, the worst day ever for this company. Shares fell by 24%. The company's CEO, Antonio Filoso.
Can you tell people what Stellantis is? Because
yeah,
this is probably one of the worst rebranding exercises.
The maker of Jeep,
iconic
Chrysler.
Name. Chrysler, everyone knows. But Stellantis, go ahead.
Yeah, so Stellantis.
That's my BBO column for that.
Okay.
I always think praying mantis. I think it's like a bug.
Okay. Whatever you guys need to remember it, but it's been a public company since going back to 2014. And it's having the same problem that some of the other large auto manufacturers have had when it comes to EVs. 22.2 billion euros in charges, much of were linked to unwinding Carlos Tavares' bets on EVs that were destined to be unprofitable. Carlos Tavares has been out of the company for more than a year, and they're still working to unwind some of those bets. Once again, Stellantis, the maker of Jeep, Chrysler, and more, falling by close to 24%.
And I'll just add, too, I just want to point out, software stocks did rebound on the day, but still down for a fourth straight week. All of the big names here are still sliding on a weekly basis, including Oracle and the like. Let's take a quick look here at what's been going on in the debt markets. We saw yields actually rise on the day, up about 4 basis points on the shorter end of the curve, a little bit less on the longer end of the curve. But we should point out, on a weekly basis, it was still to the downside all across the curve. In fact, a parallel move down here. So keep an eye on that. That's going to be a big part of the story, particularly as we get into next month and some of the freshen up economic data.
Just making sure you guys have your long johns for the weekend, because it's going to be...
My long johns?
Yeah, just in case.
Is it going to be cold?
Yeah, like 5 degrees tomorrow, the low.
I feel like we're used to that. You know, we're acclimated. It's been frozen for so long.
Are we? Anyway, that is a wrap. Guys, have a good and safe weekend. Stay warm, stay well. That is our cross-platform coverage. Radio, TV, YouTube, Bloomberg Originals. Katie and Romain continuing there on TV on The Close. And, of course, Tim and I continuing on Bloomberg Business Week Daily right here on TV. We'll see you again, same time, same place, on Monday.
All right, well, the markets are closed. We've wrapped them, and now a push ahead to what everyone's going to have their eyes on over the next 48 hours. Levi's Stadium in San Francisco, San Jose, California, to be precise, and Super Bowl 60. The close is all in on the big game, a huge lineup of some of the biggest players in the world of sports and in the world of gambling. Stick with us. This is The Close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Katie Greifeld.
And I'm Romain Bostic. A rebound day here on this Friday after 3 straight days of losses in U.S. financial markets. A strong push higher here as the bargain hunters, the dip buyers, stepped in. The S&P rallying 2% on the day, but most of the buying, believe it or not, it was in the small and mid-cap space. The Philadelphia semiconductors were up 6%, but it was the S&P 400 mid-caps hitting a record high. It was the Dow Transports hitting a record high, and it was the Russell 2000 outperforming the broader market by one of the bigger differentials that we've seen in several weeks. Bitcoin also getting a bit of its mojo back. As far as the individual names, it wasn't all just people buying the dip. You had names in there like Budweiser, Anheuser-Busch rallying for a 7th straight day. There we go. We got PepsiCo rising for a 7th straight day. You have Mission Produce, maker of avocados, rising for a 4th straight day. And look at low, DraftKings actually having a great day, up 4%, and actually one of their best weeks in several months.
Well, that brings us neatly to our top story this hour. We've been waiting all week. We're counting you down to Sunday's big game for a special edition of The Close business of the Super Bowl. In all-star lineup on deck, we have Tickpick CEO Brett Goldberg on soaring ticket prices, FanDuel and DraftKings CEOs on prediction markets shaping up the betting landscape, and the former president of the Washington Commanders on the boom in sports investing. Romain, all of that and more coming up.
Well, let's get right to it here as we kick things off live from Radio Row in San Francisco. Bloomberg's U.S. sports business reporter Randall Williams on the ground here for Super Bowl LX, which in English is 60. Randall, what's going on the ground there? I mean, I know it's got to be pretty crazy out there, not only for the world of sports itself, but to be in a place like San Francisco or San Jose, to be more specific here, the heart of our tech industry. What's going on?
It's incredibly busy. As you can see, there are dozens of people walking behind me in my shot, but Super Bowl 60 in San Francisco has been a tremendous success. I've been having a great time. It's actually my first time in the city, and it's buzzing. I mean, they have definitely leaned into the tech side of things. There's an innovation summit not too far from where I'm at right now, and they have a lot of the tech leaders that are there. It's being presented by YouTube at the Dolby Atmos Theater. So they're leaning into the tech side of things, but Super Bowl 60, if you ask anybody around here, they're going to tell you it's been a success.
Yeah, it's really interesting, too. I mean, we're focusing on the business of sports here. And with that in mind, give us some context on just how big of an event the Super Bowl is, not just when it comes to the sports world, but some of the deep pockets funding these teams.
Sure. I mean, you think about the two teams playing. One of them was bought by Paul Allen, the former co-founder of Microsoft, who's now, the team now is controlled by Jody Allen. And then you have Robert Kraft, who needs no introduction. Two billionaires who control multi-billion-dollar franchises. And, you know, you think about media as well. NBC is broadcasting it. They're doing both the Winter Olympics and the Super Bowl at the exact same time. The business of sports is booming. There are hundreds of millions and billions of dollars flowing in every single day.
All right, Randall Williams, really appreciate your reporting. That is Bloomberg's Randall Williams on the ground from Radio Row. Meanwhile, betting platforms gearing up for their biggest weekend of the year ahead of the Super Bowl. A bit of a litmus test for the more established apps now facing competition from newer upstarts, Kalshi and Polymarket. We spoke with FanDuel CEO Amy Howe earlier about her plans for the big game. Here's part of that conversation.
There's a gradual buildup as you get closer to the game, and obviously there's a big surge right before. Last year, if you look at some of the numbers, at our peak moment, we were taking 70,000 bets per minute. If you look at Amazon on a nominal day, they'll take 35,000 orders per minute. So it's a pretty big ramp up, a lot of surge, the day of, and then of course it doesn't stop once the game kicks off. You've got some great live betting options, so you can bet on the next player to catch a pass or the next player to score.
And Amy, we have to talk about prediction markets. The headline on the Bloomberg Big Take on the terminal today is Kalshi is taking Super Bowl bets away from sports books. Of course, you've answered, though. You launched your own prediction market back in December. FanDuel predicts you can bet on sports in states where traditional online sports gambling is illegal. So what kind of uptake, what kind of interest are you seeing there ahead of the Super Bowl, with the caveat that it's only been a couple of months?
Yeah, we're delighted to have FanDuel Predicts live. It's actually live in all 50 markets, but you can only access the sports contracts, as you said, in states where sports betting isn't legal. So we view this as a great complementary offering to our core sports bet. And in a state like California, right, where sports betting isn't legal, this allows us to really engage with the consumer in advance of opening up the state. At the end of the day, our North Star is still we want our industry-leading sports book in all 50 states, right? We're in about 25 states right now. California, we're doing the hard work to open up the state, but our offering in legal states is, vastly superior to what you would see in the prediction markets. If you think about the Super Bowl, you have 700 markets. You can parlay just about anything you want. You can customize. You can do social betting. So we don't view prediction markets as a replacement for it, but it is a very nice complementary offering for us.
Well, you mentioned that FanDuel predicts it's available in virtually all United states. And as I understand it, it's economic indicators and then it's event contracts tied to specific asset classes that you can access in all states. So what are you seeing there? I think that's really interesting, the fact that you have these events contracts for sports, but also sort of an expansion for FanDuel when it comes to some of those asset classes and indicators.
Yeah, that's right. It's a really nice part of our flywheel. And prediction markets have been around, obviously, for a very long time. But you can go in as a consumer in all 50 states and, you can buy a contract on where the S&P 500 is going to close or the price of gold. We'll also offer contracts on political elections, cultural events like the Grammys. So it's a fun way to engage in a different form of entertainment. So we're ecstatic to have it live now in all 50 states. And we have a terrific partner with the Chicago Mercantile Exchange. It's really been a really phenomenal partnership.
Have you been encouraged by the regulatory process or some of the moves on regulation with regards to making sure that this product does roll out and you have cohesive regulations across the various markets?
We have, and we think as the industry leader, we think we have a lot to offer. We're looking forward to sitting down with Michael Selig, the chairman of the CFTC. I think it's going to be important to make sure, as the leader, we've brought all of the consumer safeguards to prediction markets that we have in the legalized sports betting states. So we spend, as a company, hundreds of $millions on responsible gaming. Well, we have phenomenal relationships with the state regulators and all of our constituents in the legal states. And we've been very clear from day one. We will only offer prediction markets, sports contracts in states where sports betting isn't legal. And the minute, in California, for instance, the minute sports betting goes live, we will flip over to our legalized sports betting products. So I think team has done a really tremendous job of making sure that we can protect the legalized state model that we believe in, and we're still working hard to open up the remaining states, but at the same time, as the industry leader, offer a great product to consumers in states where sports betting isn't legal.
Well, Amy, like you said, the North Star here for FanDuel is to legalize sports betting in every state that you can. So what is the future of FanDuel predicts if and when we do see sports betting legalized? And I believe it's 11 states where it's still illegal. Will you keep the product up and running, or would you plan to phase it out?
Well, remember, FanDuel Predicts isn't just sports contracts, right? So we're always going to have an offering in all 50 states with, the financial benchmarks, cultural events, political events. So it's always going to be a nice part of our overall flywheel. But I think you have to remember there's a $675 billion black market. There's tremendous demand, and so between the legal sports betting product that, again, we're still working to open up 50% of the states, and Predicts, we think there's, both of those offer a nice opportunity.
Amy Howe, the CEO over at FanDuel, her Super Bowl, of course, as it is for pretty much everyone in the world of sports betting. We're going to catch up in just a minute with the CEO of DraftKings. We're also going to talk about some of those sky-high ticket prices. Can you still get one? The co-CEO of Tickpick. He's also going to be joining the big program in just a second as we count you down to the big game on Sunday. This is The Close on Bloomberg. Well, trying to attend the Super Bowl in person has never been, a cheap proposition. Average ticket prices, more than $7,000 a piece. That's the second highest ever. This according to reseller Tickpick. Joining us right now is Brett Goldberg, the co-CEO and co-founder at Tickpick, to talk a little bit more about what we're seeing on the ground. Brett, obviously there's sort of the full price tickets that I get if you were, quick enough and lucky enough to jump on them. And then, of course, what you can get on the resale market, something that you specialize in right now. I see on your site there are some available. They're in the thousands of dollars, as you would expect here. But give me a sense here as to what drives that differential in price. Is it the location or is it the teams playing?
Yeah, thanks for having me on. So you're certainly right. This is the second highest average ticket price. Granted, we are 2 days away. So typically what we have seen historically is that prices do come down as we get closer. So those average ticket prices likely will come down from that $7,000. Currently, right now, as an example, we're seeing $3,700 get-ins, obviously very expensive. The cheapest face value would be $950, but those are pretty impossible to get your hands on. So we've seen prices come down quite drastically the last 4 days. We anticipate the volume that we sell, which is typically the last 24 to 48 hours, and we'll sell about 50% of all transactions will come in this next 50%. And then, of course, your club seats can be over $10,000, and up into the upper zones, you could be at $3,500.
Give me a sense here as to the types of people that are coming, particularly through Tickpick, both in terms to buy and sell. Are these like diehard fans? Are they just opportunists taking advantage of it, or what?
On Tickpick as a marketplace that is selling tickets to fans, it is your typical diehard fan, maybe a small business owner, corporate clients. But we are selling tickets to fans, and that's our focus, ultimately standing up for the consumer, making sure they have transparent all-in pricing. We have a Super Bowl newsletter. So we're trying to help consumers figure out when's the best time to buy tickets. All-in pricing now is required by federal law, but we've always done all-in pricing since our beginning, since 2011. And generally speaking, we're making about 14% on a sale, while our competitors are making about 20%. So we are the low-cost provider, and it is your diehard fan for the most part.
Well, to your point on, you have data on when is the best time to buy. If I miss Super Bowl 60, if I'm just dying to go to Super Bowl 61, when would be the best time to purchase those tickets, assuming I had several thousand grand lying around?
whatever I'm going to tell you is going to be wrong. I know that. If you got a high risk tolerance, you could wait till day of. There are Super Bowls where that hasn't worked out, and everyone's waiting, and then you see a pop in prices. Right now is a pretty good time. We've seen prices come down about 25% in the last couple of days. So it's all about your risk tolerance. I think there are great deals to be had right now. If you're willing to wait till the day of, you can. It could go against you. So it's you should feel pretty good if you haven't bought now because you're going to save a lot of money, but it's a pretty good time right now.
So if right now the average price for a ticket is just above $7,000, you say in the next few days that'll probably dip a little bit as we get closer to the game. What magnitude are we talking about here?
What's interesting is there's a lot of dynamics that go on. So what we were seeing early days was that the price to pay to get into the building compared to like club seats was pretty close. Then you saw that pull apart, and now you're seeing a big spread again. So you're talking $3,500 to get into the building and $10,000 for some of your best seats. So a pretty big spread. Depending times, you'll see those get very close. So a day or two ago, it would have been maybe $4,500 to get into the building. And you could have been at a $12,000, $15,000 club seat. So, at times you see that compress, and at times it's a big spread.
I do want to talk a little bit about just transparency in this process, and I know Tickpick and you guys have sort of tried to raise that flag as being champions of that. But do you think we're going to see overall a greater push, whether it's by force through regulation or legislation across the board, not just for the resellers, but even for the originators, if you will, who can remain nameless?
When you think about the marketplace business, there's really two sides. There's the sports side and the concert side. And generally speaking, the sports side's pretty well accepted. We work with the Rams, we work with the Eagles. Like, these are real fan experience partnerships that we have with the Jets, the Ravens, the Texans. So even as a marketplace, we have those official partnerships. So we are getting unique inventory from them and packaging them and selling them as unique fan experience partnership, getting people onto the field, post-game, pre-game. So in the sports world, marketplaces are accepted and they're viewed as a distribution channel. And I think pricing ends up being much more market driven, and that's okay. You don't have the same on sales in the concert where there's just a lot of noise if this is the right way that the system should work. So there's a lot of conversation on the federal and the state level. And partially what's happening is you have artists who are trying to sell tickets below what the market price is. So there's a lot of arbitrage opportunity. The same arbitrage doesn't really happen in the sports industry.
All right, Brett, really interesting conversation. Really appreciate your time. That is Brett Goldberg. He is co-CEO and co-founder over at Tickpick. A really interesting conversation that, if you have a high risk tolerance, you could buy in the next few days.
Well, and also the waiting to the last. I've done this a few times, not at the Super Bowl, but I've done this for World Series. I've done this for NBA Finals, where if you are, assuming in the city or willing to travel to that city and wait to the last minute, you can often find some, affordable, within quotation marks. You're still
but are
pay.
You going to find a hotel room? Are there still tickets available?
Well, I used to be a young man once, and
really?
sometimes you just crash on somebody's couch or on a park bench with somebody, and those days are gone.
It's a young man's game. No,
but anyway,
I'm not built for
looking
that.
at the website, $4,000, you can actually get in the door here.
$4,000.
Yeah, you'll be in the nosebleeds, but you'll be there.
You won't see anything.
And you can see Bad Bunny.
Yeah, you'll hear him too.
He's
definitely performing.
I heard.
Puerto Rico is part of the United States. Still ahead, our Super Bowl coverage continues with DraftKings CEO Jason Robins, who joins us live ahead of the big game. Those conversations coming up next. This is Bloomberg.
All right, well, the influence of Latin American culture in the U.S. economy has been pervasive, whether it's the rise of agave and mezcal or the explosion of the singer Bad Bunny, who, of course, is going to be performing the halftime show at the Super Bowl out in California this weekend. Joining us right now to talk a little bit more about this is Claudia Romo Edelman. She's the founder of Sotol Romo. It is a distilled spirits brand made out of Desert Spoon. She's also the author of a book on Bad Bunny. Claudia, great to have you here on the program. I do want to start off with Sotol, because I have to admit, I didn't really know what it was. I said, is it tequila? Is it agave? And they said, no, it's something completely different. Just explain to me what this is, Desert Spoon.
Sotol is the name of the spirit, but also the name of the plant that grows in the desert of the north of Mexico, takes twice as long to grow as the very distant cousin agave, and that entire time makes the plant produce all the sugars needed. So the result is that you need to add only 2 ingredients to Sotol, plant and water. Same process as tequila and mezcal, very different plant, better product.
So give me a sense, though. I mean, we know that certainly in the tequila space and the mezcal space, it's very crowded. I mean, anyone who's been into a liquor store in the United States, it's everywhere now. How does this fit in on the shelf? How does it stand out?
It is a very different, like this is a newborn category that is going to take, I think that consumer, it's going to cut fire with the consumer because it is, if tequila and mezcal would have a baby, probably it would taste like Sotol, but it is leaner, cleaner and smoother. And if you're a little tired of the saturation of tequila, and if mezcal is a little too smoky for you, Sotol is the right answer. It is, again, just plant and water, so whatever angle you want to think about it, whether it's like a little healthier, Sotol is great. Now, we are going to be launching today the ultra-premium category-defining brand called Sotol Romo, and ideally this is the way to present it in a culturally relevant moment like the Super Bowl with Bad Bunny, a Mexican product, a modern Mexican luxury, presented in a very culturally relevant moment here at the Super Bowl, from the desert to the Super Bowl.
Well, Claudia, tell me how I drink it. I know some people sip tequila. I am not one of them. Is this something to be had on its own, or is Sotol more for cocktails and the like?
So our brand is made of 100% distillerion, and that means it's really pure and lean, and it is very easy and very precise. So you can use it either neat, on the rocks, or with every cocktail that you normally have, tequila, mezcal, or things like vodka. So it goes really well with every meal, and because it is so sophisticated and has no sugar, it is perfect. It is perfect for a celebration. For example, for your very sophisticated audience, after a week like today, after a week like the one that we have had, people probably need like a bridge to transition from the professional to the personal, and people are drinking less but better, and therefore we're trying to bring a better product to the market so that people can still enjoy life and do it with something that is familiar to you, like tequila and mezcal, but it is a better product.
Well, you mentioned something that I want to talk about a little bit more, that people are drinking less. That's particularly pronounced when you take a look at younger generations, such as Gen Z. So how did you think about that in crafting this drink and thinking about your launch strategy, how to bring in that younger audience that maybe just isn't as open to alcohol as previous generations?
So people are drinking less but better and moving away from sugar, from the browns, moving towards the whites. That's why the rise of tequila and mezcal is so prominent. And from the whites, Sotol is the best category, let alone my brand, but Sotol is the best, the cleanest and leanest. And if I look at the data, which I did 3 years before getting into this, I come from a family of Sotoleros, but I started looking at the data. And what is growing is a category that is sustainable, organic, artisanal, and that is additive-free, and that connects you to a great story. The story of Sotol is such a great story, and it's genuine. So I think that that's what got me excited to launch my brand.
So, Claudia, before we let you go, though, I also wanted to just get your thoughts here, too, on the halftime show. This is going to be the first halftime show that, at least based on what we know, is going to be performed almost entirely, if not entirely, in Spanish. A milestone, particularly given the growth of the Latino, the Spanish-speaking population here in the United States. Obviously, Puerto Rican singer Bad Bunny, one of the biggest stars out there here. Is this sort of a symbol, I think, of how this country has evolved, both in terms of its demographic and in terms of the culture?
Absolutely. Bad Bunny is not only the representation of Latino culture, but also the love of entire America to Latino culture. It is not that he's top number 1, 2, and 3 in all global charts because there are so many Latinos. It's because this is transcending. Latino brands, Latino culture, Latino music, Latino optimism is everywhere. And I think that that's what makes him an incredible halftime show that that I hope that everybody's going to enjoy the way that I've been enjoying writing a book about him, going to Puerto Rico to his concerts, and seeing such a love letter to Puerto Rico and to Pride.
You know, Claudia, you got to come out to New York sometime and get me and Katie. We're all going to have shots, have some sips of the Sotol Romo, and listen to some Bad Bunny and have some fun. How about that?
You got it. Let's close the bell with a drink.
All right. I love it. Claudia, really great to have this conversation. Congratulations on the launch. That is Claudia Romo Edelman. She is founder of Sotol Romo. Now, coming up, DraftKings CEO Jason Robins, as well as Jason Wright. He is the former president of the Washington Commanders, set to join this edition of the closed business of the Super Bowl. This is Bloomberg.
Yeah, we've been talking a lot about Super Bowl Sunday, not only the most watched television event of the year, but huge business. We've been talking about the ticket prices that are sky high. If you want to fly there, you want to get a hotel. Obviously a big boon, too, for the city of San Francisco. We should point out the game is actually being played in San Jose, but that's a whole nother conversation. But we talk about the revival of San Francisco, the new mayor, everything he's been trying to do to clean it up, and now you have the biggest show on earth basically right there at your doorstep.
I don't actually know the geography of San Francisco too well. So how far away actually is San Jose?
Well, you know, I'm in New York, but so I don't know the answer to that.
I just assume you know everything.
I wish I did. I claim that I know everything, but it does get to this idea, and Bloomberg did some great reporting on this idea.
You skirted past that question very
that most of the financial benefit of this is actually going to be more towards San Francisco because, you know, I've been to San Jose, no offense to San Jose, but there's more to do in San Francisco. And so most of the people in terms of the hotels, the restaurants, entertainment, a lot of that money is going to be spent there. And that could be a boon for a city that, of course, has been struggling with, you know, a lot of issues with homelessness and crime and, you know, all these, you know, tech bros saying we're leaving and going to wherever.
Yeah, I mean, I was just in San Francisco last month for the JP Morgan Healthcare Conference. And I got to say, at least in the, you know, several block radius that I was operating in, the city looked great. My brother, who's there all the time, said that they cleaned it up for the conference. So
did you not get to San Jose?
I did not. No. I went from the hotel to the other hotel where the conference was at. So
I love that.
Anyway, more than $1.7 billion in bets are expected to be wagered on this weekend's Super Bowl. That is according to a recent projection. DraftKings is at the center of the surge just last hour, actually, announcing an expanded prediction market catalog in a deal with Crypto.com. So let's discuss live now with DraftKings CEO Jason Robins. Jason, great to have you. Very timely as well. So talk a little bit more about what you're doing with this Crypto.com partnership. As I understand it, it'll allow for player-specific events trading on NFL and NBA games. What exactly does that mean in practice?
Well, we just really expanded our content offering. So previously, we had offered markets on things like spreads, over-unders, who will win the game. Now we've, as you noted, expanded that to player props and many other things across different sports. So really excited to be doing that before the biggest weekend in sports in the year, and really excited to be partnering with Crypto.com and adding them as our latest exchange alongside CME.
So when it comes to player-specific event trading, I mean, is this something you could do on DraftKings proper? Why do this through a prediction market necessarily?
Well, the thing is, not every state actually has legal online sports betting. So where we do have legal online sports betting, you're right, we do offer those types of things. It's a different product, but very similar type of experiences on our sports betting app. But many states, including where we are now for the Super Bowl, California, don't have legal online sports betting. So prediction markets represent a great way to help meet that consumer demand. And we're really excited to be doing that for the Super Bowl.
Jason, what do you think longer term as we kind of see this evolution of prediction markets? What's the balance between what we now look at as a prediction market relative to the traditional betting and gambling side of this? Is that going to be sort of kind of morphed together, or are they going to be kind of two separate tracks?
Well, I think they are different products, but obviously they meet similar consumer demand. So I think they can coexist together quite nicely. If you look at Europe, most exchange-based betting, which is, you know, the closest analogy to what we have here in prediction markets, is not really a big part of the overall space when you do have legal full online sports betting. And we see that now in the states that we operate online sports betting products in. But I do think that it's a different landscape here where you still have many states that have yet to legalize online sports betting, and this represents a great way to help create something that engages customers in those places.
I am curious with regards to your business specifically here and how you manage the risk. It is sort of the risk that you take on from the betting side. Is that commensurate with what you would take on the prediction side, or is it different?
Well, what's interesting with prediction markets is that it's a little bit of a different product. So you have the platform, and then you have the market makers. The market makers are the one taking the risk. On the sportsbook, the traditional legal online sportsbook, we are doing all of that. So that is something that's a little bit different. Now, that said, we are also standing up our own market maker for prediction markets. So I'm excited about that, and we will participate in that. But that won't be everything. We'll have market makers that are making markets across a variety of different things, and a lot of the risk will be taken on by them and some of the upside too. But I think being able to really balance that out and have different options just gives us more flexibility in how we can manage risk in our product.
Yeah, it's really interesting to see sort of the market structure evolution of these prediction markets. I want to talk a little bit about your specific new app in this space, DraftKings Predictions, that launched in December. As I understand it, right now you're in sports and financial contracts. You plan to expand into other categories, including culture, entertainment, and crypto. Where are you in those plans?
We're expanding. I mean, Crypto.com is going to add a lot of that content for us. So we'll have things like politics and other things. So very excited about the expanded opportunity. I do think that the bulk of the opportunity is in sports. Politics will be a meaningful thing too, but really mostly around midterm and really more so presidential elections. But sports are evergreen, as you know, so that'll be the big one, I think, for the foreseeable future.
I'm curious what the conversation has been with the major sporting leagues. I mean, we just got to the point where they finally were willing to embrace the traditional sports books, sports bettors in a way that for years, decades, they had kind of shunned. Have you had meaningful conversations with them about the growth of prediction markets and their willingness and their comfort level with this being attached to these games?
You know, we haven't really had a in-depth conversation. We've sort of been more listening and hearing their thoughts. Naturally, just like with sports betting, they want to make sure that the right protections are in place to protect the integrity of the game, make sure any bad actors are rooted out, make sure that, you know, there's certain types of markets that maybe just don't make sense to have, that aren't in the best interest of anybody, like who's going to get injured or something like that. Those are like very natural concerns for the leagues to have, and we support them in those. And we're going to try to partner with them and also with the CFTC and the rest of the industry to create the right guidelines so that everyone's doing this in a way that all key stakeholders are comfortable with.
All right, Jason, we'll let you get back to it. I know a busy week for you. Jason Robins, the CEO over there at DraftKings, out there on the West Coast, San Francisco, San Jose, Santa Clara. It's all sort of melding together. When we come back, we're going to talk to Jason Wright. He was the former president of the Washington Commanders for several years. Now he's an investor in the world of sports over at Ariel Investment Management. That conversation coming up after the break right here on Bloomberg. Our coverage of the business of sports heading into this Super Bowl Sunday continues. And though men's sports have historically dominated much of our conversation, women's sports, they're starting to sort of get into the mix as well. So much so that Ariel Investments, led by Melody Hobson, has a new fund called Project Level. It just closed out at $250 million. It's focused on investing in women's sports assets. We had a chance to catch up with former NFL player, former Washington Commanders president, and now head of investments at Project Level at Ariel, Jason Wright. Take a listen.
The reason we are excited about women's sports is that it fits with Ariel Investments' history. Ariel has made its name in looking at under-researched, under-leveraged, smaller cap businesses in the public markets. And if the Lakers and the Dodgers and the Yankees are NVIDIA and Microsoft, women's sports are the small caps of sports. And so $250 million puts us amongst, if not the largest women's sports fund in the world. And that allows us to get at scale in the cap table so that we can really bring what's unique to us, which is operational expertise, not just the ability to run a healthy P&L and EBITDA producing women's sports franchises and leagues, but also to bring the relational capital to get good deals done, to get market rate vendor deals done, to get scale in things like supplying and purchasing that really make these businesses sing, so that the women athletes can continue to get paid more and the investors can make profitable returns on these. And it also allows us to look into investments that are better for our LPs overall than a fund that only focuses on sports teams and leagues. We're interested in the adjacencies, the tech companies that do ticketing and analytics and health and wellness technology, the real estate and real property related businesses that surround women's stadiums and venues that really have a differentiated return profile for our investors and make our flagship properties more profitable.
I am curious, though, given your experience, obviously you're a former NFL player, but more recently, of course, you were the head of operations, president of operations for the Washington Commanders. How does running an NFL franchise translate into running some of these smaller sports, if you will? Is there a direct overlap, or are you having to sort of learn all over again?
I've had the unique, for better or worse, experience to have to rebuild an organization from the ground up. Most NFL teams print money hand over foot, and there's not a ton of work to do except at the top end with the ownership group and really thinking about strategy and brand building. But at the Commanders, because of the situation we were in, we had to break down and rebuild that organization. We turned over 85% of the workforce. We had to reverse the revenue trajectory there, and we ended up growing over 50% in revenue in the first 4 years that I was there. In that process, I sold the team to a new ownership group, had to do all the trademarking around a new name, did several naming rights deals, and ultimately got a stadium deal done on the tail end of leaving. And all of that gave me the experience to help do what women's sports needs at this time, and is build that infrastructure for the first time, both the physical infrastructure and the business infrastructure to run like a highly professionalized organization. And so the challenges that we faced there and had to turn around have now become a gift in bringing that intellectual capital to women's sports.
You mentioned that women's sports are the small caps of sports. I love that. And unlike the large cap NFL teams, which you mentioned print money hand over fist. I mean, when you invest in an NFL team, for example, they have a relatively massive built-in audience. So when you're investing in women's sports, beyond just the money itself, how much time do you spend thinking about boosting the profile of women's sports in general and its actual athletes?
Gratefully, we are already there. That work has been done for us. As I mentioned, the latest catalyst was Caitlin Clark and bringing a new fan base to bear. But there's a whole generation of families that have grown up playing youth sports alongside girls, again, close to parity in youth sports at the high school level now, that see no difference between men's sports and women's sports. So the audience and fan bases are there. I'll give you an example. The NHL averages around 350,000 viewers for a regular season game. The average NHL team is worth $2.2 billion. The WNBA, average WNBA team averages just under 1 million viewers per game, 970,000. The average WNBA team per the last valuations is about $250 million. So you've got a 10x difference in valuation and more viewership on the women's side. So there is an arbitrage moment, frankly, in women's sports where that valuation gap will close, because viewership is what drives overall revenue, the media deals, the brand deals that come alongside that, and the fan base that comes with it. So we are in an era where the fans are hungry for this, and more hungry than they are for some of the men's sports. It's on us to create an ecosystem that's professionalized enough to take advantage of it.
Hey, Jason, before we let you go, I'd be remiss, given that you have what believe is the Golden Gate Bridge over your right shoulder there. Just talk a little bit about the Super Bowl. Obviously, you played for the Falcons, Browns, a couple other teams I'm forgetting here. I mean, when we talk about the spectacle of that, from a business perspective, how important it is, obviously, to the cities to host it, but really to the NFL overall. I mean, this is kind of their premier day. What are you expecting on Sunday? And more importantly, do you think the new Washington Stadium will one day host a Super Bowl?
Number one, I absolutely hope so. I think that was the vision from the beginning, especially with all the hard work we did to get back to the RFK site. That is the vision, to bring it back to the nation's capital. And I have all the confidence in Josh Harris and that team to make that happen. That said, the Super Bowl is a unique experience for me because it is really the pinnacle of American sport. And it's the place that brings together all people of all types and all backgrounds, which is really the promise of live sport in this new era where AI content creation and so many other things are eating up our feeds and eating up our time. Live sports is the place where we're closest to our humanity, where people of all backgrounds who are arguing in chat rooms and disagreeing on political discourse come together and high five when they're wearing the same colors. It is an entertainment spectacle. It brings out the opulence of sports and shows off the money that's in sports. A lot of deals get done here. So to me, it's a reminder of the power of sports.
And our thanks to Jason Wright, head of investments for Project Level over at Ariel Investments. We've been talking about the Super Bowl all afternoon.
Yeah.
You're not actually going to be watching it.
No, I'm actually going to be on a flight to Italy. So the Milan Cortina Winter Games have already kicked off. Katie Greifeld. So we're going to go from football to skiing, curling, ice hockey, all your favorite sports.
Unpatriotic to an extent, but I'm excited for you.
It's the global sport.
Right.
It brings us all together.
For sure. We'll have a wonderful time.
All right. Well, thank you for being with us here on The Close. This is